is the Director of Monetary Policy Department at the Central Bank of Nigeria, and we'll be looking at achieving an effective monetary policy in this time of global risk or shock. We'll be right back.
Do you want to live your life financially free? Do you want to take your business to the next level and succeed? Then the time is now. Moneyline with Nancy on AIT presents a free one-day personal and business acceleration masterclass, a live conference geared at revealing top secrets by elite business experts and life coaches in Nigeria on ways to improve yourself, business and create wealth. Date, Saturday 17 September 2022. Venue, Nigerian Export Promotion Council, Maitama, Abuja. Time, 10 a.m. to 4 p.m. Attendance is free. Visit our social media handles to register: Instagram and Facebook at Moneyline with Nancy TV, Twitter at Moneyline TV.
For more inquiries and sponsorship, contact 0814-833-9088 or 0906-691-2600
or email us at info@moneylinewithnancy.com. Proudly supported by Be there.
All right, welcome back to the program. My guest is joining me right now. Keo Manowu is head and the office of the chief economist of the Securities and Exchange Commission. Welcome to you, and thank you for joining us.
Thank you, Nancy. It's good to be here.
Likewise, good to have you on the show. Now, I know we have a lot to discuss, but let's just run through at least for the next few minutes. The CMC meeting was held just a few days ago. Can you speak to my audience let's start from the basics. What the CMC meeting is about. That's what the Capital Markets Committee meeting, what is it about? At what points do you have your meeting and all of that, just for educational purposes?
Okay. The Capital Market Committee meeting is a meeting of all the stakeholders in the capital markets. It includes the infrastructures, that is the exchanges, the other capital market operators, and the regulator, that is the Securities and Exchange Commission. We hold it 3 times a year. And at those meetings, we discuss everything that has to do with making our market bigger, deeper, and more efficient. So that's what we do. We look at issues around policies that affect the market. We look at products, new products. We look at even the little issues around processes in the market, and we try to make them right.
Okay.
That's what we do.
At the last meeting, what was the consensus on how the capital market has performed in the last few months? I do know in 2020, the capital market performed exceedingly well, even in the pandemic.
Yeah.
I think it was like, what are the second best
in
markets?
The world.
Yes, in the world. 2021, not too badly.
Yeah, not
this
bad.
year, about a 15% return.
Yeah.
Year to date. If we're just opposed to inflation,
yeah.
You know,
yeah, but Nancy,
that's negative.
Yeah, no, but Nancy, that's really a good performance. Think about it. There are headwinds all over the world. You can see the inflationary pressures everywhere. Everyone is struggling. And for our market to return 15.5% as of yesterday, year to date, that's really a good performance for the equities market. The fixed income market, 5%. Commodities market, 4%. So I would say that our market has sort of weathered the storm. But when you come to, inflation and the real return, that's a different thing. But I would say that the market hasn't done badly, especially when you compare the market to other markets around the world. You would see that we have done well.
Okay. So, in essence, should I take this that you guys gave yourself a good sign?
And yeah, we did, but we also know that there's always room for improvement, which is why we discussed certain issues that would help us get better. So some of them include handling Ponzi schemes. You know, the Ponzi schemes sort of scare people away from the market, you know, make investors lose their monies and all that. We also talked about the expired tax waivers on fixed income trades. We of course we want government to, you know, bring back those waivers because they help reduce transaction costs and help the market to have better returns. We discussed many other things, including the unclaimed dividend issue.
We'll come to that, but let's start with the Ponzi scheme, which I want you to divulge more details on that, because even on this show, many times I've talked about Ponzi schemes, even all those loan sharks. You know, you see that a lot of Ponzi schemes or pyramid schemes are coming with a disguise.
Yes.
And I don't know how far SEC is going in terms of recognizing that and sanctioning, and first of all, even communication and education of the Nigerian public. Okay.
The SEC is doing a lot to communicate. We've been in newspapers, I'm on this show, we've been in on TV at many times talking about this. But in addition to that, the FSRCC, that is the Financial Sector Regulatory Coordinating Committee, has also taken it up. So we as the SEC, the capital market suffers the effect of Ponzi schemes, so does the central bank, so do all the other members of the financial industry. So we also have a forum where we are also trying to educate the public. We've been in the media lately, we've been to newspapers and all that, you know, telling people. But the thing is, let me just tell Nigerians that it's always important to verify who you're giving your money to. For instance, if somebody comes to you with an offer that appears too good to be true, it probably is not true. If someone tells you he's going to give you 10% returns every month, that compounds to over 120% in a year. That's not going to be true. And also in the capital market, we don't even let the capital market operators promise returns. So if somebody is promising you outrageous returns, you should know that something is wrong. And we've even made it easier. We have established what we call the capital market operator search. It's on the SEC website, sec.gov.ng. Get there, look for the Siemens portal, click on it, and you type in the name of whoever is marketing you to give them money. And it comes up whether he's registered with SEC or not. Or you can place a call to SEC or send an email. Very simple. And you verify. Why it is important that you only patronize registered operators is that we look into what they do. We oversee what the registered operators do. We make sure that your monies are safe. For instance, in our fund market, CIS funds, what we call collective investment schemes, or what people call mutual funds, we ensure that there's custody of the money. So what it means is that custodians hold the money while the manager manages. So your money never gets into the hands of the manager. So your money is always safe. So even if the manager, the management company, the asset manager has any problem, is bankrupt, is whatever, is insolvent, your money is safe. So these are, you know, we have all these, risk management measures we have put in place to protect people's monies. But then you have to help us by putting your money into firms that are registered with the SEC.
And licensed.
Licensed,
you know? Yeah, it's good that you said this, because even the first thing that I normally say, especially to people, sometimes there was a day I was in one of the big hotels here in Abuja. I went for an event, and as I was around the lobby going out, a young gentleman just came to me, gave me a flyer. I looked at it. Oh my, we can double your money. I looked at him. So he looked at me. I think he now recognized who I was. Yeah. So I was like, is your company registered with SEC? At that point, he just started, you know, I think that is just the first port of call. And the first thing you should do also is just to go on the website and just click the name of the company marketing it. So I hope that that information has been taken by our viewers. How about the legal crowdfunding platforms?
Okay. So for the crowdfunding, what we did was, when we saw that the MSMEs could not raise money in the traditional exchanges because of the scale, the size, we decided to, you know, come up with rules around crowdfunding. These rules allow these little companies to raise money through crowdfunding platforms. However, these platforms must be registered with the SEC, so that the SEC will also have oversight. When monies are paid into these platforms, how do we make sure that these monies get to the issuers? How do we make sure that the monies are used for what the issuer said they would be used for. And that's why we decided that we should come up with these rules. But some unscrupulous ones have refused to get registered. So what that means is that when the unsuspecting public puts in money into those platforms, nobody's protecting them. So that's what the warning we are giving. We're asking that operators of such crowdfunding platforms come into the SEC and register using the rules that we have created.
How about for those that have not registered and still taking money from people?
We're coming after them.
Are you coming after them, or you started coming after them?
We have started coming after them. So what we are doing, our enforcement department has started compiling names, have started reaching out, you know, the SEC has some investigative, powers. We have a police unit and all that. We go after them. The ones we get, we close them, we prosecute the promoters. So that's the promise we are making to Nigerians.
Are there some that have been prosecuted now? Are there some that have?
I know some are. Some. The process is on for some, right now as we speak. Both the crowdfunding firms and the Ponzi schemes. Okay,
how about even for some licensed operators? You know, for some of your licensed operators that still, you know, in there you see a bit of shenanigans with the management and all of that. They can even promise outrageous returns. Yeah. How do you deal with those people? They are licensed, they are registered, legal business, but somehow illegal stuff still go on in the company, and they bring money, take money from people.
Yeah. We have sanctions for that. What we do is we try our best to inspect them, to monitor them. But if you could, you know, slip off our radar, and that's why we say that people can, you know, send us letters, send us reports of such unscrupulous behavior in the market. If there's any capital market operator that is registered, that is, you know, carrying out some shenanigans, let the SEC know. The SEC will take action immediately. But we have, you know, procedures in place. We have processes in place to check. But like I said, sometimes a few could slip off. So we would need information. So if you have your monies with any capital market operator and the operator is not treating you the way they should, let the SEC know.
No. Let's go to the big elephant in the room, which was also declared during your meeting about the 177 billion naira in unclaimed dividend. That's money that is just hanging in there. People have not claimed the dividends. That was for 2021. I guess for 2022 will still be compiled. We may get that later on. What is the Securities and Exchange Commission doing about this, despite the e-dividend policy being in place?
Okay. One of the things we are doing is to make sure that more unclaimed dividends do not get in there. What I mean by more is when new investors come in, they are well mandated from day one so that their dividends don't start accumulating also. So what we have now are dividends accumulating to shares that have not been claimed in the past. Remember, around between 2008 and 2010, there was a time there were a lot of IPOs and a lot of people bought shares in names that weren't theirs. So we have that identity issue. Okay. So for about 2 years now, we have opened a window for such people to come in and claim their shares. Of course, if those shares are not claimed, when dividends are paid on those shares, they keep accumulating as unclaimed. That's what is going on. So over the years, dividends continue to be paid to those shares. So what we are saying is, if you know that you bought securities, you bought shares at that time in names that are not yours, we have given, opened the window where nobody's prosecuting you or anything. If you can prove that those are your shares, you can get those shares back now, and then you can claim all the dividends. And then one other thing that has raised it is that many Nigerians are yet to mandate their accounts for the e-dividend. You know, we created an e-dividend system that allows dividends to be paid directly into bank accounts. Yes. So, but the investor has to mandate his or her shares. What that means is that the investor finds out the shares he has, which companies, finds out the registrars of those companies, fills a form, just a form, and in the form, the person verifies his account details. The bank helps. The bank will stamp that those are the correct account details. And these dividends get in there automatically. So the process is there. It's just for investors to now, you know, take advantage of it.
So are you saying that this unclaimed dividend is as a result of that lag that we had between 2008 and I think 3-4 years later, when we had those IPOs and all of that.
A large chunk of it.
How about the other part? Because some people also ask me questions sometimes about, oh, I bought shares many years ago, or even during the consolidation of the banks.
Yes.
I still get those kind of...
That's when those happened, yeah.
Okay. So, or some people will be like, oh, I've been buying shares, I don't even know where they are. What do I do now? I don't.
Okay.
Some don't even know their registrars.
Okay.
Where should they begin from?
Okay. So first thing, when you bought the shares, you must have had some certificates given to you as proof that you bought the shares. So those certificates have been dematerialized. What we mean is that you can no longer use those certificates. All the shares are now at the central CSS, at this depository. So, but you have to come out and say, these are my shares. So first, you go to your stockbroker. The stockbroker can help you with the process of dematerializing. Well, it's dematerialized already. Yes. It's just for you to claim. So all these shares are in a pool waiting for the owners. So if you have bought shares 10, 20 years ago and you don't know what to do, get those share certificates. That's the first step. Find out who is your broker. If you don't have one, get one.
What if their brokers have been liquidated?
That's why I said get one. The shares are not with the brokers. They're with the CSD. Yeah, so if you get a new broker, take those certificates to that broker. The broker will help you to claim those shares. They will open a CSS account for you, and those shares will be transferred into your account, and you start getting benefit for those shares. So, and it's a simple process. It's just that some people think, oh, the shares are small or the dividends coming are little, but they are not, I can assure you. Someone claimed his own recently, and he told me the amount. I mean, the guy got alerts the whole day because he did all the mandates, and on a particular day, just started getting alert for shares, for dividends that had been paid for many years. He was very happy. He called me to tell me the amount. I will not say.
How about for those that, because I also get this question, for those that perhaps their parents have passed, and they have share certificates as at that time, or my dad bought shares in my name, we don't, or whether when you have a parent that have passed, under the bed one day you will just see, for some companies that are existing, not the ones that have, like some breweries company, all those, you know what I'm talking about. How can those people
So we also have a system. Follows what the probate, the legal methods for transfer of assets. So go to your broker. The broker will tell you everything you need to know. There should be, I'm not a lawyer, but there are things, documents you have to bring, letters of administration. You go through the probate system, and those shares can be transferred from the parents who are now deceased to the children or to whoever is the beneficiary. And those shares can now be put into the beneficiary's CSS account.
Okay.
So there's a system for that.
So this unclaimed dividend stuff at 177 billion naira, do you think that BVN has a way of also, you know, moderating or reducing or solving this issue?
Yeah, we will say thanks to CBN and NIBS for the BVN. The BVN can help, and in the capital market we have tried to leverage the BVN to an extent. We would like to leverage it more, but I think that the BVN can help. But the thing is, those things were done without correct identities. We had people who wanted, because they wanted to buy more and more of into more and more of these IPOs, they used different names. Some rearranged their names, some used names of children and all that are not their names. Some even, you know, manufactured names. But what we are saying is, if you have proof, there are all kinds of things that can be used as proof. Things like, okay, this is a check I issued for it, this is the broker I gave it to, and all that. And you have proof that these shares were actually yours. These shares can now be put into your name. That's what we are saying. They all, no matter the name you use, no matter how you arrange the names, some ladies use maiden names, you know, and now their names have changed, all their IDs have the new name. There's a process for it. Just start it off, and I'm sure you can complete it.
Okay, let's talk about other issues that also came out from the CMC meeting. The issue of corporate bonds exemption from taxes.
Yeah. Okay, so we used to have, for 10 years, we had tax waivers on corporate bonds, just as we have on the sovereign bonds. But those waivers expired at the beginning of the year, and that means that they're now being taxed. Transactions on these bonds are being taxed, which is it presents a disadvantage to the corporate bonds. You know, first, the corporate bonds, of course, are more risky than the sovereign bonds when they are denominated in Naira. And now the person who buys the corporate bond now suffers again tax. So what it has led to is an increase in the yield and further crowding out of the corporate bonds from the market. So what is happening is that we have the sovereign bonds getting, quantum of sovereign bonds getting bigger and bigger, and those of corporate bonds reducing. So it's not a very good thing for the market, because what it's doing is it is denying the corporates that source of financing, that debt financing. Okay. So what we are saying is that these waivers should be reinstated. It is the belief of the Commission that in the long run, the government gets more from the fact that corporates can issue bonds than when they tax the bonds. Okay. Of course, when corporates issue bonds, they do more business, they are bigger, they have more profits, they pay more tax.
Okay, who is SEC engaging? Because SEC is government. So who is SEC engaging to exempt corporate bonds from payment of tax? Are you engaging?
Yes, we are.
You are government?
We are. No, we are. It doesn't work that way. You know, government has different facets. Yeah, government has different facets. If you bring someone from the FIRS here, he's going to argue against what I'm saying. Yeah. So, but I believe that at the end of the day, we would all agree at something that works. At the end of the day, we all mean well for Nigeria. We're engaging the minister, we're engaging FIRS, and we all have different points of view, but we all mean well for Nigeria. So at the end of the day, I believe that we will arrive at something that works for everyone, that gives the best to Nigeria and Nigerians. Okay, finally, let's talk about the revision of the Capital Market Master Plan. I think in June, it was submitted to the Finance Minister, Zainab Ahmed. So speak to me about that, 2021 to 2025. You know, there was also a Capital Market Master Plan, 10 years, during Arumote's period. Correct. Yeah, has that phased out? What exactly do we have now? Okay. So during Arumote's time, we had the Capital Market Master Plan that was to go from 2015 to 2025. Yeah. That is the document we have now reviewed. Okay. So we didn't set it aside, we only reviewed. You remember, it's a dynamic market. Things have changed, assumptions have changed. For instance, there are some products that they didn't think of in that document that we now have. You know, you can see digital assets and all that. Yeah. So we needed to, and this master plan is like a blueprint. It's like the map we have been following to develop the market. So we needed to update it to be more relevant to what obtains today. And that's why we reviewed it. So it's the same plan, but now reviewed to incorporate, you know, contemporary issues. Okay, I think I'll have you again on another day because there's so many issues. But at least we looked at the CMC meeting a few days ago, some of the outcomes. So thank you very much. Thank you very much, Nancy, for coming. Yeah, thank you. All right, I've been speaking with Oke Umano, who is the head office of the chief economist of the Securities and Exchange Commission. We'll be going on a short break. When we come back, Dr. Hassan Mahmoud, Director, Monetary Policy Department at the Central Bank of Nigeria, will be joining me here. We'll be looking at global shocks' impact on Nigeria's monetary policy. Do stay. Hello everyone, I am Nancy Naju. It's been many years of sitting and interacting at this Moneyline with Nancy's table, dissecting, analyzing and proffering solutions to the world's economic problems, most especially in Africa and Nigeria. This table has granted me access to the world's smartest people, technocrats, policymakers, problem solvers, enterprise leaders and more. This time, I chose not to be alone at the table, but to bring you to a free one-day personal and business acceleration masterclass conference so that you can gain the skills, the knowledge, tools that you need to maximize your business and personal life. You don't want to forge on unequipped and unprepared. Join me and awesome speakers to help prepare and equip you for the next level of growth. You can visit any of our social media platforms to register or scan this QR code. I look forward to welcoming you all.
right, welcome back to the program. Dr. Hassan Mahmoud, Director, Monetary Policy Department at the Central Bank of Nigeria, is joining me. Right here, we're looking at global shocks' impact on Nigeria's monetary policy. Dr. Mahmoud, good to see you again. Welcome to the show.
Yeah, good morning.
Good morning. At least in the last few weeks, we've been talking about monetary policy.
Yeah.
I don't know if we should define it. No, we shouldn't define it. Go on our YouTube channel and watch that show. Let's quickly just go to the issue of the day. I think it was this poet, John Donne, if I'm not mistaken, that said that no man is an island to itself.
Yeah.
How can you explain the complexity of local monetary policy, especially now in the case of Nigeria, Nigeria's monetary policy in the context of globalization, in the context of fragile and global capital inflows and outflows?
Thank you, and good morning again. I think the perception we will start from is the fact that Nigeria, as an economy, is regarded as a small, open economy. What that means is that, yes, the economy is an economy of about $500 billion. However, the economy has interface with other economies of the world, in the sense that you trade with other economies of the world, and that falls into the idiom you just mentioned, no country is an island. You know, you have to, there are things you cannot do yourself. You need others that have already done it and already have the technology to use to do your own, and along the line you develop yourself. So country specializes in different things. So you need all to trade with those countries to get those things, either goods or services or technology or even people. So that interaction with other countries that have their own structure, have their own economy, have their own interest rate, exchange rate, and everything, will have implications for your own economy. And then the conglomerate of all those economies, which we call the global economy, the behavior and development in those sectors or in those environments will also impact on your economy, because they will adjust their policies in their own economy to suit the challenges they are having. And because you are dealing with them, then you will be seeing the impact of those challenges on, or those policy adjustments on your own economy. So you also need to take adjustment. So the global shocks are what we refer to. The things that are not caused by you, by the global, you are not a contributor to those development, but because those that were affected by those development will have to take policy decisions to address those development in their own economy, it will, by extension, contagiously come to impact on you. And you also in your own economy will have to also be adjusted. So you see the global economy responding to different shocks and that's why there's always the need for coordination for policy response. So issues around globalization, as let us come together, we have common challenges, let us see how we can effectively address those challenges in our domestic economy without necessarily impacting negatively on the generality of the economies of the world. So global shocks come from, it could be climatic, it could be financial system collapse like we had in 2007, it could be COVID, it could be Ebola, different kind of shocks, that will come, and then maybe those economies will stop certain things. Maybe they will stop production, or they don't allow flights to come into their country, or they change their exchange rate or inflation, interest rate regime. If your banks or your financial institutions have exposures to them, those new high interest rates that if imposed will affect them, or they will even stop your businesses from operating there.
Okay. It's quite interesting that you said that Nigeria is a small open economy.
Yeah.
And what came to my mind is that how acute is it really now for policymakers with small open economies, as you have said, like Nigeria, in terms of the limitation of monetary policy to achieve the desired goals, or to, influence domestic financial conditions? So perhaps the monetary policy, the CBN, that is in charge of monetary policy, is having limitations.
Now it's even more challenging. Substantially, I can comfortably say that the last maybe close to half a decade, or if not a decade, policy initiatives in most of our economies, including Nigeria, is largely in response to global shocks or global developments. So there are less of, even the last monetary policy meeting that I held, you will see that the governor will have read a lot about what is going on in the global economy. COVID came up, Russia, Ukraine came up, oil prices build up came up. We are not contributors to those developments. But the decisions that MPC members took in terms of adjusting rate, in terms of creating other avenues for foreign capital inflows, in terms of looking inwards so that we shield ourselves more from these shocks, we are likely to address those shocks. That's what we call headwinds. And that comes to hit you from different parts of the world.
Lose your balance.
Yes, so you lose your balance. So you need to put your feet on the ground and stabilize. And the only way you can stabilize quickly is that when you have some very good shock absorbers internally, domestically, to absorb it. And that's why, the emphasis is always now, look inwards, make sure that your policy measures that you adopt are growing your domestic economy, so that even though you are competitive, you will still find that you are still resilient. Your level of resilience also tells you the strength of your economy. We've seen economies that are in war and they are still surviving. You see what's going on in Russia. The country is in war, but it's still making $1 billion daily. It's because they've done a lot of things domestically to shield the economy such that even in crisis, they're able to move on. Some economies with the smallest of shocks collapse to zero, and you start seeing everything degenerating to a level where you see people losing their jobs, businesses closing and GDP going negative and all the indicators going northwards.
So the question now is that, do you think that Nigeria's monetary policy, which is conducted by the CBN, has been resilient enough? Because if you take a look at even the responses of monetary policy in the last 2 years, let's say since the pandemic, you see there was a time, interest rates was held unchanged for a very long time until we started seeing the spike in inflation. You had to realign aggressive interest rates. You were into economic expansion. The MPC was telling CBN, continue the economic expansion interventions and all of that. Do you think that has been able to solve the problem of the global shocks that we've been having, really, realistically? Yeah,
the best example I'll give now is the COVID, because that was before the Russia-Ukraine crisis. The best example would be COVID. And what happened during COVID? We saw global economies closing. We call them shutdown. There were restrictions, no movement, no flights, no ship, Yes. Before then, there was a collapse in oil prices, so nothing was coming in. We had ships on the sea that nobody is ready to take, and we're paying for those ships just to be staying there idle, and people were just cutting down their prices, half price, to just get it off, to take the cost off. But what happened? What they say something is the mother of necessity, or whatever.
Necessity is the mother of invention.
Yes. So central bank and other institutions, fiscal, monetary, all came up with innovative measures to address this unexpected, development. And that's why you see central bank or monetary authorities now, or monetary policy, using other tools, to supplement monetary policy. Because some of these, COVID now is close to 2 years, it's not something that was addressed within 3 months. So you have to start using other unconventional monetary policy tool to address the shock in your economy. Don't forget that the responses you are doing is to, keep your economy going. Yes, you are responding to shock from outside, but it's for your own economy to keep going. People retain their jobs, businesses are functioning, people's standard of living is not eroded completely. So during that period, a lot of policy measures were taken, conventional and unconventional, to address that shock. And if those policy measures were not taken, particularly those that targeted households, farms, vulnerable groups, SMEs, healthcare, if those measures were not taken, the impact of that shock on the economy will have been enormous. And we'll see it in other economies that are the likes of Nigeria, how that some economies are still in recession now. They have still not pulled out. Nigeria has gone to a level of over 3% in GDP growth, getting to 4% just within the... So, that time the argument in the literature was that it's going to be a V-shape. Some were actually of the shock. So it all depends on how innovative, how very quick. And the other thing I will add is that in most cases now, because we've come to realize that shocks are a permanent phenomenon. They will always come. Crisis will always evolve. So it's not like you sit down before crisis period episodes are like 10, 15 years apart. Now you see them like almost every 2 years. When one come, Ebola came, left, COVID came, Russia is coming, So economists are preparing for those shocks. So you have to be proactive. You have to have your resilience sectors well buffered, such that even if those shock comes, if it lasts 2, 3 years, you are still able to stand, going on. So as well as doing proactive measures, you're also doing measures to shield you from those shocks.
Okay, the question is now, the policy responses that the monetary policy has taken, have you seen it effective? And did it also come at a timely, did it come timely? That's one. The second part of the question is that we've seen an aggressive monetary policy, at least in the last 2 MPC meetings. Do you think that it will reduce the effect of global shocks? Or how have you guys over there been looking at the chart and the table? Has it been able to reduce the impact of global shocks? 3, sorry that I'm bombarding you because I'm also looking at our time, so you use like 3 minutes to answer the 3 questions. The third one, really it's about, this capital inflows into the country. We've seen NPR at 14% now, the US hiking rates, global economies hiking rates to tame inflation. What has been the impact in terms of inflows into Nigeria? Okay,
I'll look at it from 3 sides, just the way you asked the 3 questions. The first one, has the policy measures been able to address some of the shocks? Yes, I can say that yes, it has been able to address some of the shocks, and it has also helped the economy to still remain stable. We had negative GDP just for 2 quarters, and then by the 3rd quarter we're out of it. So even within 2020, by the end of 2020 we're out of the crisis. Many of the economists went into 2022 or late 2021. And what happened within those periods? Because measures were taken to address the real sector of the economy, because that was the sector that was really impacted. And you see that then central bank or monetary policy focus was on reviving and sustaining output growth so that jobs and businesses are retained. And that dovetailed into Russia-Ukraine crisis, because if we had not had the pickup in agriculture, in manufacturing, due to the various interventions that went in both fiscal and monetary into the system, if we had not had the pickup in capacity utilization and production level to when the Russia-Ukraine crisis came, and you see cereal prices of cereals and wheat and all the products skyrocketing, input for fertilizer also skyrocketing, will have been in a more severe situation now. Food crisis was eminent in most of the economies, but you see that the interventions has substantially helped. Inflation, food inflation was one factor that was really pushing up the headline inflation within the economy. But because of those real sector intervention and the output that came into that space, you see that cushioning substantially. And you see, yes, food inflation was growing, but the speed at which it was growing was a lot moderated. And we see that we have not effectively entered into a food crisis yet, even though it is coming. On the FX side, yes, where you sustain it, because of the first crisis, the COVID one, you saw businesses stopped in the US or all other advanced economies. So you see inflows that were coming through remittances or even financial credit inflows to our banking system, all froze. If we had not had the cushion that we had, don't forget that even throughout this period, we still have our reserve hovering around 40 billion. Some countries' reserves were 75% eroded. They had to collect loans from different places to, beef up the reserve. But by the beginning of 2021, we're already seeing a 15% increase in foreign remittances inflows. Our records showed that because incentives were created. We had the Naira for dollar, we have other initiatives.
200.
Yes, so the 200 has not even started then, but we have the Naira for dollar, other incentives. Yes, so those things help to sustain the inflows. And we see, records showing that even by 2021, inflows to Nigeria improved in terms of remittances and that. Even the I&E window, After the shock, when placements there were just less than 10, 20 million, you start seeing growing over 200 million and then growing over to 300, 400 million on a weekly basis. So those helped cushion the effect, and that shows the level of resilience your economy is to those shocks.
Okay. I'm having a feeling that we'll continue this discussion. On those global headwinds. Yes, I'm having a feeling now because of some of the things you said. But many thanks for joining us.
Thank you very much.
This morning. All right, I've been speaking with Dr. Hassan Mahmoud, who is the Director of Monetary Policy Department at the Central Bank of Nigeria. We've been looking at monetary policy amid global headwinds or global shocks. That's the show today. Thank you all for being a part of the program. Today, be the best you can be and be a change that you want to see. I am Nancy Najib. Bye now.
What I've learned from school has helped my trading journey, because definitely trading has to do with a lot of calculations, a lot of reading and understanding, you understand? And these are some of the things school help us to do to build our knowledge of understanding.
Please sit down. On occasion like this, I really mean it,